Good day, everyone. All right, let me get this link shared out, and we'll get started. We'll start with Bitcoin. This is going to be chill. I'm going to go over some of my thoughts for the week ahead. I'll explain what's on my chart here. But yeah, I'm testing important resistance. Live stream starting now. All right, we'll give everyone a couple minutes to get in here. A little bit of bearishness forming here on Bitcoin. We'll take a look at order flow. This was a primary intermediary target up at 64K. Out of this local range, we had quite bullish divergences in order flow forming at the lows and then into the weekend and on this local uptrend. I'm going to kind of go over the main idea I have here. There's kind of a couple variations. Let me move this over here. I'm gonna, yeah, good morning everyone. All right, so this was a level I was looking for over the weekend on Bitcoin. It's actually, I did a members live stream on the 3rd, kind of talking about this idea. I did share it on Twitter as well. I mean, it's this same chart as my last update on Twitter. But just the idea of price rallying up towards this 63,920, 64K, these highs here, local GP. And I'm going to kind of go into my thought process here for lower locally and maybe a retest of 67K later in the week. Or we could just break out here. But let me, so yeah, this was just the idea back through the weekend. Bullish absorption in order flow. Order flow looking pretty good for a move to the upside. I'm going to explain what was bullish there. Just go over that for the members so it's clear and for everybody here as well. A little recap. Targeting this up into this high. We didn't quite form this descending parallel structure. But we are getting a nice reaction off the key kind of idea there. And I just updated here saying not going to be updating order flow all weekend. Just thought I would mention we have pretty significant bullish divergences coming in. This is before this kind of local breakout here. And then today, I'm not usually trading the minor levels on the weekend. I was doing a lot of research on my bearish stock market thesis, which maybe I'll talk a little bit about. But anyways, during the week earlier, I had shared, did I share this in here? Maybe I should share this in the day trade scalping channel. Kind of interesting. Doesn't matter. I'll just go over the thesis on the chart here. All right. So the idea being that for some bearish scenarios locally, I'll just turn on this folder. A couple folders here. Let's go over the first one. So obviously, the context of this week is on the 4-hour chart. A lot of people were looking for the big breakout, lots of aggressive longs above the 65K high. We have this big rejection, wiping out some of that liquidity. And there's two ideas here. One, this is kind of trappy. If we have this bounce here, everybody gets wiped out of their longs, but as we start bouncing, they say, oh, look. See, it was just another higher low. This is an uptrend. Yes, we rejected here, but market structure has now broken. We've broken this big downtrend. We put in the higher high. This is the higher low. This was my thesis last week. Order flow is not super bearish here, but I think it's still, this idea is sort of still here. And I'm just sort of narrating, I got some comments where somebody said, oh, it's so stupid to pretend you know what people are thinking. It's not really that stupid because you kind of do know what people are likely to think, right? They're likely to think, like my thesis down here was everyone's going to be saying, look, we put in a higher low, a higher high, this is a giga breakout. I mean, and you know that's what people are going to be saying down here, and that is exactly what everybody was saying. That was literally my exact thesis, was fake out the higher low, higher high. Everybody's going to be super bullish. Anyways, so the idea here is I'm going to remove some of these annotations to kind of clean it up a little bit. We put in the higher low, but then we put in a lower high, and as price starts rejecting, I'm not saying we will, by the way, this is one scenario. Let me just, hopefully my computer, there's so much stuff open, I should close a bunch of it. I have like 20 things open in Excel charts too. We put in the lower high, people get really bearish, and now they're saying, oh, this was a lower high, and now we have a lower low. So now this higher low, it looks like new low, lower high, new low. This gets really bearish, but this is actually just the middle of this range. It's also the 618 from this pivot. Take this impulse low, gets really trappy. Then we push back up towards this 67K level, and we end up forming a range here. So let me just remove some of this. So the price action could end up looking something like this. Everybody's getting bearish here now if we reject. I'm not saying they're bullish now, which I'm not saying is even stupid, but this is the idea. They view this as a higher low in the context of this uptrend, market structure breaking. This is all bullish. Ends up being a lower high. They get really bearish here because this looks like a break in market structure. This is right into the middle of the range. They start shorting. A lot of people, a lot of people who were bullish start shorting because we've now put in a lower high, a lower low, only to have price rip up back through the breakout. Everyone gets bullish again. We tap the POC and we rotate back down through the lows of the range. So that's kind of my mid-time thesis for a lower high rejection here. Now, I still think this level above the 67K, it's still something I'm wanting to short around if we fail to break out of these highs again, that big POC. So it's relevant to me even if we don't put in the lower high here. But I like this sort of local idea. Could get a little bit trappy. Let me actually get rid of this because this is an even more local idea here. So let me just redraw out the thesis here, which is, this is a big range. This is the middle of the range, lows of the range, top of the range. And something like this would just look like a bounce off the middle of the range, a sweep of the highs of the range, nice clean short trigger if we don't break out, rotate back down to the lows of the range. Obviously I have those targets down at 42K, but this could also be viewed in the context of a range. This could still be viewed this way even if we take these highs, which wouldn't be so surprising here. But if we do reject, I'm going to go over some more local ideas as well. So let's get rid of these. If we break out of this, claim this level and start carrying on higher through the POC, through these highs, I mean, probably got to start looking for all-time highs as the primary idea there. Maybe order flow will give some clues. But right now, testing a potential lower high, I think it's kind of a clean idea here. I apologize. Hopefully the stream isn't too laggy. My computer is really struggling here. I have way too much stuff open. We'll take a quick snapshot of order flow here. Let me go to XO. All right, so the bullish divergences, I already kind of pointed this out in the members Discord, but the bullish divergences here are just CVD making new lows, grinding lower, price making equal lows, higher lows. This is just all bullish absorption, and it really does, in the context of this uptrend, still probably lean bullish with some early signs of a little bit of bearish absorption coming here at these local highs on the 5-minute chart. Nothing major, but we see some aggressive longs opening up into this local GP. We saw the big rejection up here. Certainly some aggressive longs to get trapped right at the highs, right? 23 million increase in open interest. Longs on the way up. Some short stopped on the way up. But some really aggressive longs right into resistance, but a lot of those getting wiped out on this first pullback. So this doesn't look particularly bearish. This is a little local sign of some bearish absorption forming. Nothing major. We'll see what happens here. And maybe there's something interesting is going to happen over the course of the live stream. But I want to cover quite a few things. Let me kind of cover my local thesis, like how I would approach my kind of trading plans for the week ahead locally. And I'm going to go over this from a couple perspectives here. All right, so the first thing I do is I just want to mark out all of my key structures, right? So there's a few ideas here. We're in an ascending structure. This is just an uptrend. I'm not saying that I would just trade every trend line bounce here, but it's good to know this is our ascending structure. Kind of have a little bit of a shallower one here. We have our point of control right below this impulse low. Probably a nice liquidity idea for having, if we do see a rejection here, come and take this low. And I'm going to clean this chart up a little bit. The reason I'm marking out all these levels, not to say I know exactly how price is going to interact with them, but kind of having a general idea of how I might trade around the structures here. If we take this impulse low, it's just important to note this is probably going to be a really reactive level. Lots of liquidity under here. We could see price react nicely, might offer a nice scalp long position, but we're breaking down our ascending structure in the case that price is taking this low. So this is probably some important resistance. It also would align maybe with the middle of this ascending channel idea, our 382 resistance, and the retest of this ascending structure here. So as a scalp, probably needs to be a potential take profit target. What would a rejection look like from here? A little rally, a move down through these local lows on the 15-minute chart, right into our kind of daily close timing here. GP of the move, form an ascending channel, take this liquidity, maybe bounce up into our what would be our future GP. I'm not going to go into all of this analysis, but just the basic ideas, right? If we come down to test this level, well, we could pull this, and we understand. I'll just turn on the paths here. We understand if we bounce from here, this now becomes our 618 resistance. Maybe that we have a little pivot high here to take. Maybe we put in a higher low and come and retest this level before a move down. Maybe we put in, a lower high, higher low, test this. This might be a nice short setup come Wednesday. But these are all the relevant structures, ascending structures, key retracements, all the liquidity ideas if we reject from here. And so I'm going to be looking to trade around this local context in the week ahead. And if we just break out, then this becomes irrelevant. If we just break down, then this becomes irrelevant. But until we do, this is all of our local structure. So I'm not saying this is how you have to approach the charts, but this is just the idea that marking out all the key ideas here, all the local ideas, and sort of having an idea of how you would trade around them. For example, if I take this long, but price just, let me turn this on in the folder, but price just rips through this resistance, well then maybe I just carry that long, consider taking profits higher, weakness, stop to break even. Maybe there's even a continuation short setup here, but I quite like this as a local idea. I think it's pretty straightforward. You know, we can get rid of, it's not saying exactly how price is going to interact, but we can see how these ideas, just from a liquidity perspective, might be interesting for local long setups. Take the impulse low, we have a nice high volume area here, take these lows. Do you have to go so far as to think about all of the potential structural confluences in terms of fibs, parallel channels, all that stuff? Maybe not, but sort of something I prefer to do. Let's take a look at order flow here as we take these local highs to see if there's anything interesting to note. And then I'm going to look at some other charts as well. But big ideas for me still down at 57K and 67K. All right, so we're testing these local highs. Nothing crazy happening here. Some increasing open interest. Not bad volume, but this is why is this kind of local structure relevant? Well, one, it's relevant from an order flow perspective. We are seeing some aggressive longs here. This is another local bearish divergence. We're not seeing anything super aggressive. Like we could have seen 10, 15, 20, 30 million aggressive longs open here. We're not, but probably still leans a little more bearish at local resistance here. Oh, we see a 4 million long in BTC USD. So that's a little bit of confluence here. Big long opening relative to this pairing right at the highs. So we can see this local bearish divergence potentially forming here. And, you know, if we go to the 5-minute chart, we're just kind of forming this ranging structure right at our local 618 resistance here. This could be a lower high, could just be a continued range. But nice to look for signs of weakness here, especially off of this bigger idea. All right. Let me just scroll through the chat really quickly. Someone says, what percentage chance do we have for 50s and for 40s? I'm not sure I could give an exact percentage or even a rough one. I think it's really important to see what's happening around resistance, right? So like, ultimately, if you're shorting, say, this 67K level, and you see this happen and tons of trap longs here and this kind of rejection, the short setup looks like this. You know, the invalidation looks like this. The targets look like probably at least to the lows of the range. You're starting to get something like 12 to 1 down to 42K. You're getting 16 to 1, 17 to 1. And you're putting your risk on right at resistance at a sign of weakness. And if we just break out, then probably not taking that short, right? But for example, I would never just say, I'm going to short here because I know 67K is going to come. I'm not going to size for any kind of invalidation, and I'll just hold this short because I know that 42K is going to come. Like, you're still wanting to get clean entries with clean invalidation, good asymmetric risk reward, not wanting to just randomly short somewhere and just hold that to some big liquidation target because you think this is coming, right? But at least that's not how I like to trade. I like this idea that I have locally here for a rejection with a lower high here. Order flow's not looking extremely bearish here, but it's enough, right? We're getting these rejections, we're getting these lower highs, we're getting a bit of absorption. It's enough to make this idea quite interesting. All right, let me just scroll through a little bit more. Thanks for that, Kemozabi. How do you find out timing? I'm assuming you're referring to the timing intersections for me. It's just a matter of, you know, when are all of our key market opens, maybe mark out some of those. Like, these are just, you know, you have New York opens, daily opens and closes at the Asian session. Then you have just confluences between parallel and horizontal structures is the idea there. So like this is just an intersection of a major market session, a potential parallel structure, and a key fib retracement. All kind of aligns with some nice timing there. You can pull fib time as well. I actually think we did do that. I think this, I was looking at this over the weekend, was that kind of idea. So let's just go to the 5-minute chart. I'll just show an example. I actually had this drawn out on the weekend, which is we had this ascending structure here. It was drawn like this. I may or may not have long that. But we had this ascending structure here aligned with kind of this GP idea from the origin of the ascending structure with a little bit of a parallel idea. Price coming and running that liquidity. So that's kind of the sort of timing idea. Like this level looks quite nice if it aligns with all of this parallel structure. Somebody asking, how do you get your footprints bar statistics to show data in the millions? Mine only shows data in the double and triple digits. So it's by default set to, it shows the number of Bitcoin in the position. You can go in the settings and change to synthetic volume and make it so it converts it to dollars. Just go into your settings in EXO and you should see that. Well, there's no certainty. Somebody says you said you would look for signs of weakness here. There's no certainties, but you kind of mark out your structural resistance on the lower time frames, maybe some ideas of lower highs. You see if there's some aggressive longs coming in. Are they getting absorbed? Is price rejecting? Like, you know, people will say something like, what do you consider a reaction? Well, a reaction is price reacting, right? Like if you don't know that price won't break out, but you have this idea here of some aggressive longs coming at the highs, a major pivot idea maybe at the 618 for the lower high, an initial rejection, some range forming here on the 5-minute chart. As price comes up to retest the highs of the range, you see some aggressive longs opening up into the highs of the range. You see a rejection, you see it retested, and it's just to say there's some resistance forming here. You start to have some signs of weakness. If price starts breaking up out of these highs, claiming these highs, maybe this is the next target to get retested. But like a much more clear sign of strength is in this context, right, where you have really bullish absorption forming, price, lots of aggressive selling into this uptrend, and lots of absorption. I mean, this is a lot more compelling for a bullish move than this is for a bearish move. But this is some early, you can see right here, right? Even locally here, CBD is making a slightly higher high. Price is making a lower high. We have resistance here. The longs aren't super aggressive coming into this level, but we know there's passive sellers sitting here willing to hold price down. So, you know, what's the short setup here? Well, the short setup is getting short and starting to target into some of these lows and see what happens below, right? And just always using risk management. That's in my view. But you have to accept the risk, you know. But you don't have to, you know. I use this phrase. You don't have to make every trade so it's going to send you into a new tax bracket, up or down. Put on a little bit of risk, and if you're a non-experienced trader, never trade with live funds. Just paper trade, right? Anyways, let's just rip through a few more of these comments, and then we're going to get to some other charts as well. I'm going to look at width as well. But like like this is just this is a sign of resistance forming, right? Is this really a sign of weakness, as most structural weakness? Not really. It's just a nice reaction from resistance, right? Like if you wanted to, if you had this idea, I mentioned it earlier in the live stream. Here. Like if you had this idea of price moving up into this GP, so this is back when we were at 61K earlier in the weekend, we had big bullish absorption. This is kind of the main idea. You had this level marked out. Now, you might not consider it a sign of weakness per se, but you kind of have this kind of critical level, and as price pushes up into that level, marked out down here, you understand this idea. Price pushes right up into the level, and this is just sort of an order flow confluence, and you see a 23 million in aggressive longs, increasing open interest right into the level. Price starts rejecting. That's an early sign of weakness, right? That's a sign of resistance. That's a clean reaction. Is price breaking out of that level? No, price is trapping aggressive longs right into resistance. So it doesn't mean price will reject, but the idea there would be to short into that level, use risk management, and try to get into a nice asymmetric risk reward situation with a trade, and just accept that price could carry higher and break out. But you have early signs of resistance forming, continued signs of weakness, a rejection, now a potential lower high, and there could be more and more signs of weakness. We have that uptrend idea that I pointed out. That could start breaking down. That could start flipping to resistance, so on and so forth. Those are just continued signs of weakness. But I prefer to look for shorts up at resistance and longs at support. I'm still looking at BTC USD and BTC USDT. I've been looking at it more. There's the volume in BTC USD has been quite low, but still BTC USD as a pairing still quite bullish absorption, arguably more bullish absorption than BTC USDT. So the context is very similar. The only difference here is we don't have the bearish divergences forming at this low, but we also don't have much volume at all. So it's hard to say how relevant this is. We had that 4 million long open aggressively at the highs here, giving us a local bearish divergence on BTC USD. So the context is very similar between the two anyways here. Someone says, why do you think we will... Yeah, I am going to answer some of these questions, and then I'll get to some more charts. Somebody asked, why do you think we will see 57K again? It's not that I think we will see 57K. It's that it's a nice, clean idea that I'd be looking for longs targeting 67K. So I don't really need to think we will see a level to have it marked on my chart and be interested in trading it, right? But I like the idea. I kind of explained the idea, right? I went through the whole thesis of, this idea of, oh, this is a higher low. Oh, no, it's a lower high, lower low. People get really bearish, start shorting into this. Everyone who was really bullish for the generational breakout finally accepting, no, this was a rejection. This was a trap. You could imagine a scenario where tons of longs are liquidated down here, lots of aggressive shorting, and then we just push up through the highs, and probably people shorting aggressively into this entire move until this happens, getting stopped out of all their shorts. It's just a liquidity idea. It's not that I think it will happen. It's just I'm prepared to trade around it if it is happening. And this kind of goes hand in hand with the next question, which is, the next question is, how do you know if a proper breakout is happening or not? I mean, you can get some signs in order flow that like maybe a breakout's more likely to hold than not. But breakouts are quite tough. Like they do either one of two things. They either, like something like this, like a local breakout, grinding, breaking, reclaiming, retesting, carrying higher. This can happen, right? Super low time frames, or price just impulses through the level quite strongly, and maybe there's signs of weakness up here. But the way I like to look at it is price is either breaking out or it's not. Like, is price breaking out here? Yes. Is price breaking out when it does this? No, that's a failed breakout. But in this case, we had bearish order flow up at the highs. That was over the weekend as well. And a little bit of a trend forming here, which is the high comes in and then really bearish order flow over the weekend, the move down, low comes in, really bullish order flow over the weekend into this move up. So it kind of goes against the idea of not trading the weekends in these cases. But we can just take a quick look at that order flow up at the highs for a frame of reference. I did point out that bearish divergence in the Discord as well at the time, but I didn't trade it. This is at the highs, right? We have the breakout and we see this all this aggressive longing coming in, a bearish divergence and order flow, price making a lower high, CVD making much higher high, and then price breaking down. So yes, structurally price is breaking out here, but we're seeing bearish signs in order flow with aggressive longs getting absorbed by limit selling. So that would just be something to consider up there. You could see the reverse, which is you could have price breaking out like this. And on the pullbacks, you see really bullish absorption. I actually went over this example, that's why this is circled. So as price is carrying higher, you have price breaking out of resistance. As price breaks out, you see a really aggressive selling coming in, aggressive shorting, longs trailing out, and it all getting absorbed. CVD making a much lower low, price making this higher low, and then price carrying higher, absorbing all of that selling. That's a sign of strength on a breakout from an order flow perspective. But it's just important to get away from the idea of how do you know if price is breaking out or not breaking out or failing to break out. You don't ever know. Price can do anything, but you're structuring maybe a trade around the idea with invalidation. And if you're getting 5 to 1, 6 to 1, 4 to 1, 3 to 1, 10 to 1 on your risk, the idea being you don't need to win all those trades to walk away profitably from shorting those types of setups or longing those types of setups over a series of trades. This is called ExoCharts. It's an order flow software. It's not TradingView. You have to pay for it. I forget how much. I think it's changed. I think maybe it's €60 a month or something, but there's free order flow software options as well out there. You can just Google crypto order flow software, and Addis or other ones have some free offerings. All right, I do want to get into some. Other charts here. So let's do that. This is a big idea on whiff for me. So I posted. I know I'm going to get a little bit of pushback. Again, it's just a short idea. Based on structure. So I'll explain the idea here as we're coming up to a potential target. I think for context, it's important to understand. Let me go here. I've had this idea for a while, right? So I updated in the Discord. I'm preparing to take this short. I'm going to explain it a little bit. This was my chart from August. You could try the higher low long setup here, which we ended up bouncing off of, just retesting these local lows into the 618. I'll reference that, or take this low. But the idea for the short would be every Twitter post a month from now, whiff, breakout of massive trend line. You can already kind of see this narrative forming here. This is inferring 100% move up, right? And I'd be looking to short a sweep of these daily highs, a rejection, and the idea of a range forming here, chopping around this trend line breakout. So that was the idea at the time. So I'm preparing to trade that idea. I even mentioned in the let's go to here. So even here, we're bouncing from this this nice 618 idea into this pivot low, breaking out of this. And I said, you know, a couple days ago, going to be a short whiff time soon. So I'm just prepared to take that with risk management. This nice bounce, we're moving up right to this kind of critical level. So the idea here, let's clean up the chart a little bit and go over it. What would be my trigger? There are some loose confluences. So if we look at this as just a potential daily range, we have all these daily highs, 1, 2, 3, 4, right into the 618 of this. We could imagine this just being a failed breakout, and we just form a big daily range here. This was the idea of long in the GP into the retest lower high. I didn't take that long, but I think it was a clear and clean enough idea. Big move up to the GP. The trigger for me would just be price runs through the highs and then rejects. And I'll take the short with risk management. I don't know if it's going to hold or not. There are some potential timing confluences here, which is we kind of have this ascending parallel structure idea, and this would come in around Wednesday. Like this would be the Wednesday New York Open, right around 8. So maybe we get something like this, right? Maybe price retraces here with Bitcoin. We push up to this high on Wednesday, and that coincides with, I know, just so you know, you don't necessarily have to think this way when you're making your trading plans. I just can't help it. Like, I'm just thinking about these things automatically. That would coincide with something like this, which is, you know, I kind of drew up this idea here. We have our Wednesday New York Open right here, coming and taking this high, retesting this trend line, sweep this high, we get a big rejection from there. That would coincide nicely with something like this on whiff, where we're coming up and not pushing to this level maybe today, maybe we're ranging here, we get that pullback, and we push up into the level on Wednesday. And I'd like that as a timing confluence structurally, this parallel channel, and I would just short the failed breakout. The short still looks interesting to me otherwise, but like I said, I just can't help but think about that coming on Wednesday in the New York Open, tagging that high, nice clean tight invalidation short setup, and how that would coincide with the whole idea I went over on Bitcoin. Now, if you're a member in the Discord, obviously, I said I'm going to be updating each of these kind of ideas independently, but just saying this is all the structure I'm thinking about, and I'm thinking about this in the context of something like that whiff trade as well. So, again, some of this might become completely irrelevant, or all of it, depending on what price does here, but it typically is good to have some general plans. Somebody says, can you please teach how to chart an asset from scratch for day trading? Well, that's kind of what I've done here, right? I mean, I've had this level since down here. If you go to my Twitter, I've shared all of this basic idea. And then as the week starts on Monday, I'm just charting and marking out all of the key structures and how I might think price could interact with all of those key ideas. Oh, did I delete? I guess I deleted all my my kind of pathing here, sort of like this. We put in a POC retest, come take that, something like that. But we'll look and see how price is interacting with these ideas. But this is like such a standard idea. Price runs straight up into the GP, big impulse, we retrace the whole impulse, get a nice reaction off of that. Trap some of those longs, chasing. So this is what I would expect to see from an order flow perspective. Lots of shorting, lots of longs stopped out into this move down, lots of chasing into this big reaction, maybe trap longs quite quickly, all wiped out again, rinse and repeat, form a little range, put in a lower high, or higher low rather, locally, come up and take the highs. We'll see what happens. Yeah, I have quite a few, I have some bearish ideas on the stock market. Futures are opening red. Could kind of go over some of those. I'm kind of interested. I have shorts running. I'm kind of interested in opening long. This isn't financial advice, by the way. I could very easily get wrecked on these trades. I'm not going to get wrecked because I'm using risk management, but they may not work. Maybe get a little wrecked. My short positions are getting quite big, but I'll be okay. I kind of like this idea on this leverage short ETF. We have this really nice parallel descending structure, a double bottom, right into the local GP. We're bouncing off of it into the pre-market. I do have some positions that I'm looking to trade into the open. So longing this is essentially leverage shorting the S&P. Let me pull this open here. I have a ton of charts. We could just blast through a lot of charts. Just trying to decide how I want to do this. I think there's potentially some really bearish outcomes on the S&P from here. I did a little bit of fundamental research. Some of these ideas are on logs, some of them aren't. That's why some of the channels are wonky here. I think there's a pretty good case to be made that we have a huge bubble on the S&P. We can look at some of these individual stocks. So I've shared all of this analysis on Twitter from here, right? On NVIDIA, for example. Using, where's that? At the day we made all-time highs, I was looking at this Tesla fractal, and I quite like this idea of forming something like this. It's almost exactly what we got. Coming, taking this pivot low, ranging, forming a series of lower highs, and then having that big move down to $75. We have some pretty aggressive longs coming in too on NVIDIA. Lots of structural weakness and resistance on some of these big stocks that make up about 7 stocks make up about 35% of the S&P right now. And I kind of want to go into my fundamental thesis, but maybe I'll save it for a different live stream. Some really nice clean parallel structures here on Apple. Some repeated rejections up at the highs here. Amazon also just in a really clean parallel structure here, a perfect parallel structure. We take these highs, retest them. Just everything at structural resistance. All these big stocks. Go to Meta here. Pushing up, tapping this big ascending structure here. Obviously need to be careful taking on too many short positions. Shared this idea on Palantir as well. Front running all-time highs, looking for weakness into this ascending structure. Yeah, I don't know. You don't want to be the guy crying market crash every day, but I think there's some clean ideas here to put on a little bit of short risk. Yeah, maybe I won't spend too much time. I'll just say I'm in some shorts. Somebody asked about Tesla. If you kind of followed my Tesla analysis, you'll know I longed into this. So this was like, my plan from here was to come, run into this trend line, push up, take this pivot high. We saw that initial big rejection. We've retested it now here. Still holding this level as resistance. And I'm targeting $65 on Tesla. So we'll see if we hold this level as resistance. But for now, we've swept the level, rejected, we're retesting it, another rejection. Pre-market on Tesla is a little more bullish. With a move up instead of a move down, starting to reject as well. So anyways, the individual stocks looking quite primed for a move to the downside. A lot of market crash, our big market crashes have come in October. I don't necessarily think that's that relevant, but it's interesting to look at China. So that's a big position of mine, and I kind of caught the Pico bottom on China. Some of these US ETFs that track the Chinese index are trading way higher. China's on a week-long holiday right now, so the markets have been closed, not open till tomorrow. But every day, these indexes just grinding higher and higher and higher. Up now 55% from the lows. So the index is trading like a meme coin, literally just gapping straight up every single day. We can see in the order flow here, just aggressive selling into the entire move, getting absorbed, price just pushing higher and higher and higher. This is another ETF that tracks the Chinese index, same thing. So it's been a nice long position to sit in. My basic premise right now is I'm long China and short the US. Gonna look at NVIDIA order flow here really quickly. Just not that we haven't had bullish divergences in some of this price action, or bearish divergences and price carries higher, but we can see there's bearish divergences into these lower highs, and here into the close last week. Some big positions opening. We had a $220 million increase in positive delta in this 30-minute candle right at the highs. You know, that's kind of a bit of a spooky, aggressive buy there if price starts rejecting. Obviously, lots of people very bullish on NVIDIA, but I think we could see price retrace down to $75. And I think that who's interested in me just kind of going over the basic premise. I'm not a fundamental analyst, by the way. That's not what I do, but some of these ideas on the S&P end so bearishly. Some of the technical ideas that I was kind of having trouble thinking, like, how would that even Is that even possible? Like, what would the world look like if that happened? How would it happen? And I started just thinking about it from a fundamental perspective a little bit, and what would be like a catalyst, let's say. Um, so I think it looks kind of spooky, but let me scroll up to some of this information. All right, I'll kind of go over the basic premise here. So over the weekend, I was just looking for some. I kind of had just an idea, which is what is. I know that these index tracking ETFs are a really popular investment vehicle now, and they've become really, really popular over the last decade. And so those ETFs just track the index. You buy the index, you get exposed to the stock market as a whole, and I started thinking about the demographics. It makes sense that the people who are going to hold the most of the S&P index and have the biggest positions are retirees, right? They've been contributing maybe for 10, 15, 20 years. I'd say contributing more probably directly in an ETF over the last 15 years. They didn't even exist until the 90s, and they weren't very popular until the last decade, and they've become very popular. And so there's this idea that we have this massive bull run. The biggest holders of these S&P positions, in terms of the average American, are going to be people who have invested in the index, and they've just experienced this massive bull run. And they're probably looking at their retirement accounts and saying, whoa, I'm going to really enjoy my retirement. So what happens as price starts coming down and the market starts putting pressure on those positions? And maybe we even run into a situation where there's a potential capital gains tax increase looming, something like that. Well, a lot of people might be feeling some pressure to start liquidating some of those positions, maybe not. So these were some of the data points that I assume would be true, and they were true, and even to more of an extent than I thought. So 50% of equity investments in the US are now made through these passive investment vehicles like index funds. The way these funds work is they're legally required to hold enough of the underlying asset to match the index's performance. So index funds allocate the capital based on market cap, not fundamentals. The larger the market cap, the larger the share of the index it will be. Because of this, there are now 10 companies that make up 35% of the index's value. So owning the index means you are heavily invested in a handful of companies. And in fact, it's sort of like what ends up happening is, like when you go look at and you see that the biggest shareholders of NVIDIA or Apple or these big tech stocks, or the Magnificent Seven as they're referred to, are Vanguard, BlackRock, State Street. Those are those ETF positions. So as people contribute to their index positions, and those companies get bigger and bigger and bigger, the index fund is buying more and more of those positions, and it's becoming a more and more concentrated bet into a few companies. So the biggest holders of these, a company like NVIDIA or Apple or Meta, probably don't even realize exactly what they're invested in. Many don't even know maybe what a NVIDIA is. They just have these big positions in an index fund. And the whole idea of investing in an index fund is that you're diversified in the market, but these positions are becoming ever more concentrated to the fact that if you own the index, 35% of your positions are tied up in 7 companies. So let me scroll through some more of this. This is as of 2020, by the way, so you would suspect the data would be a little different now. This is just Pew Research. And some of it's an estimate. It's estimated as of 2020, 52% of all American families are exposed to the stock market with a median holding of $40,000. 66% of families with income between $50,000 and $99,000 are exposed. Median exposure $26,000. 88% of people with yearly incomes over $100,000 with median holdings of $138K. This was pre-bull run. 50% of age 65 plus, with median holding 100K, 58%. Age 55 to 64, median holding 80K, 45, 54, 50K. So it makes sense, right? The older you are, the more you're going to be exposed. You've been contributing longer. The majority of this exposure is through passive index funds. When/if people start selling off their position in the index, whatever the catalyst is, maybe an increase to capital gains, it's just an example, it triggers a selling of the underlying assets. So there's so much exposure built up in the biggest companies. We just need to think about what incentives to sell and how much selling pressure there might be. What's the exposure? It's really high. I'm just kind of like bullet pointing my thoughts here. With a large percentage of that exposure being age 55 to 65 plus, passively investing in the index. These top companies are heavily correlated because of their representation in the index and the fact that the index is so heavily owned. So, for example, if 3 of the 10 companies see major pullbacks, that will have a big effect on the S&P 500's performance because they represent such a large percentage of the S&P. So what happens is, as a few of these big companies start weakening, it puts a lot of pressure on the S&P. But if you own the index, you can't say, oh, Apple looks really weak, I saw that, Berkshire Hathaway just sold all their Apple position or half of it. I want to sell my Apple position. They have to sell the index. And since so many people own the index, what happens is if selling gets triggered, it starts triggering the selling in all of the underlying assets, not in individual stocks, because 50% of every dollar invested is now in an index fund. And so you see this really correlated idea between all these stocks where if something gets weak or a few things get weak and people start feeling that pressure to sell to lock in profits, it starts cascading into all the other stocks that are in the index. And it's really important to recognize that this didn't exist. When people have sort of like the backtrack, like just own the index. The index outperforms 90% of all these funds, actively managed funds. But these ETF index funds weren't an investment vehicle before. So is it possible that the fact that before we didn't have 50% of every dollar invested in equities in these passive index funds, when this thesis is created, that maybe this idea gets warped when we actually see everybody in the same trade? Maybe. So these index investors can't say, oh, Apple and Nvidia are pulling back, let me sell these positions. They can only sell their index fund positions, which trigger selling into everything in the index. So it creates a domino effect where the massive holdings by the index have to sell off, which triggers selling into the individual companies as one big trade. It seems like a massive bubble that these index funds have become the dominant vehicle for investment, with inflows hitting record highs, valuations hitting record highs, but people say there's no euphoria. This is since 2010 to 2008 crash, just the stock market going straight up, and the individual representation of a few companies being more and more and more of the index, because as their market cap increases, the index fund is buying more and more of these. And this is the other scary part is so many people will say like, oh my God, look how much of this stock that BlackRock is buying. They must know something I don't know. They don't understand that it's them that owns it. BlackRock is just legally required. They operate this index fund to buy the underlying stock. And because why does BlackRock own 6 or 7% of Nvidia? Because it's 6 or 7% of the index. And they're just buying that because people are investing in the ETF, right? It's you that owns that stock, not BlackRock. And people are I did a poll, and it's like people are kind of almost financially illiterate in that sense. I basically did a poll and said, how many of you have invested individually into Nvidia, Apple, and I named all of the top 7 companies to diversify your S&P holdings? And a pretty large percentage said they did that, which doesn't make sense because your position already is almost entirely those companies anyways. And then I said, and choose option C if you did it specifically because of how much of those assets BlackRock and Vanguard and State Street are buying, and you want to trade with the smart money. And the idea of that is kind of like a trick question, because if you answer C there, you don't understand that they don't own it, you own it. So you're basically doubling down on your own position, thinking that you're trading along with BlackRock. All right, so I'm just kind of putting some loose ideas here together. Here's a chart showing Americans investing in equities year to year. It's U.S. households and nonprofit stock ownership as a percentage of financial assets. So it's been trending up, right? 1990, 14%, 38, 26, 30%, 2020. It's now 41.6% of U.S. households have their financial assets in equities. And a large percentage of that is in index funds, which are a new phenomenon over the last decade and getting concentrated more and more and more into these several companies, creating this big correlated trade. And many of those people are also individually investing in those companies. And those companies also are big positions. You know, it's named as the most crowded trade for a reason. Currently, 62% of Americans own stock, reaching a 20-year high. Breaking it down further, 87% of upper income Americans own stock, followed by 65% of middle income Americans, 25% of lower. In the first quarter alone, 2024, the value of assets held in the stock market jumped by $3.8 trillion compared to the previous quarter. While more than half of U.S. adults own stock, most don't own much. The wealthiest 1% hold 50% of the stocks, worth $21 trillion. If you expand it to the top 10%, that group holds 87% of stocks, which has a value of $32 trillion. So even just this gap from 9% to 10%, that's another $11 trillion in stocks held. By the way, the 7 biggest stocks in the U.S. stock market have a market cap of $13.1 trillion, which is higher than the entire market cap of the Chinese stock market. And it's all concentrated with 160 million Americans owning this index as their primary investment vehicle. Age demos, stock ownership by generation. Baby boomers have the largest share of stocks and they're not letting go. They hold 54% of equities, close to their highest share on record, which is valued at $23 trillion. It's not surprising that baby boomers hold a large amount of stock. They've had plenty of time to build wealth via Wall Street and see their investments grow. Average net worth goes up as Americans age, which often means older Americans have more money to put in the stock market. So it's just important to understand that probably a lot of these people who have been passively investing in the index, they probably assume they have some exposure to these big companies, but probably don't understand exactly what they own, right? They just know I own the stock market's going up. And when the stock market starts going down and they start seeing headlines saying, we might be in for a 20-year bear market, probably some people, after being a part of a historic bull run, aren't going to, and they're 65 years old, might not everyone's going to think, oh, I'll just hold for another 30 years. Some of them might be thinking, hey, maybe I should start selling off this position. But really, if there's so much concentrated exposure in the S&P index, and the S&P index is such a high percentage of these several companies, what happens here? And it's not just, they're not the only ones long on these companies, right? What happens when everyone starts running for the door? So I just said, think of this as these positions as a composite, man. Percentage of net worth reaching peak. Ownership in equities as a percentage of net worth reaching its peak. These are massive positions being held. We have, $21 trillion positions, $11 trillion in this demographic. And so basically, the more I started looking into this, the more I was like, wow, I mean, I could see how some of these really, really bearish scenarios could play out. Because this looks like a huge bubble. Just everyone's been told invest in the index, but it's sort of turned into a monster that no one can get out of. Everybody's in the same trade. And once everybody starts trying to get out of it, I could see a market crash. But again, I could just be, I'm not gonna, it's not like I'm going all in on the idea. I don't want to get too fixated on it. But I want to do a little bit of thinking about, what would it look like. So Here are the world's major markets based on global market cap. For this is now higher. This was in 2023. We're now at 51 trillion. Here, 52 trillion is the market cap of the U.S. stock market. Just the magnificent seven, 13.1 trillion. China 11.5. Japan 6.5. India 4.4. So we can really maybe see an inflated market cap here, especially. I didn't even share this, but if you look at it compares to GDP, right? Like as the GDPs between these countries is much closer, but the this huge discrepancy in market cap. But people say there's no euphoria. Like people are saying like there needs to be euphoria. There needs to be euphoria before we see the top of the market. Well, maybe the fact that everybody's in the same trade and we have record valuations and record amounts of people's net worth tied up in the stock market, and price has gone up straight up 700% on the index. It's all concentrated in 7 companies, and nobody's worried. I'm not saying you necessarily just have to try to sell the top, but anyways, I can see maybe there's some ideas of a major correction that could make sense. Give me 1 second. Nice rejection here on Bitcoin. Let me just scroll through the chat, see if people are calling me a clown. There's so many comments. All right. Lots of long selling off here. Lots of longs closing. Decreasing open interest, 17 million delta. So yeah, the idea here is, for me anyways, we know we have this ascending structure. I'm just talking about kind of my day trading plan. We know we have this ascending structure here. Maybe we get a little reaction there. We have the middle of a potential channel. Not going to trade that. It's not crazy. You could take these pivot lows. Like I wouldn't be surprised to see a big reaction there. I like the idea of wiping it out into the point of control, taking this impulse low for a scalp long up into this. See if we get a clean reaction there. I went over all this at the start of the live stream. Just taking each level one by one. More major ideas coming and taking these lows down here, which could also just come right at the New York Open, by the way. Like this could just retrace like this and it would still look quite clean. Just marking out each time frame of structure that I think could be tradable or relevant. So old school vibes says, I don't know, man, a lot of shorts getting horny. Are you talking about the stock market or Bitcoin? By the way, I'm gonna be so annoyed if Maybe I should have. I have a lot of shorts running, but I was maybe going to open a very, very large position on the SQQ, and I probably just trade a little smaller into the open. But I have quite a few shorts running already. The question is, do I want to have a high 8-figure short? Probably not. Yeah, I'm considering opening a big short position, but I'm still within my acceptable risk tolerances. But I already have a big short position, but this weekend I kind of got thinking more and more about it. But pre-market's dumping. I'm pretty happy with how I'm positioned anyways. Need to be careful, obviously, right? You really don't want to get too fixated on a single idea. And you know, you can start thinking, oh, the market's going to crash, this could happen in stocks, it could happen in crypto, and you get so convinced you're taking way too much risk on. You don't need to do that. There's lots of traders throughout history who have got too fixated on an idea. Some have pulled out of it okay, and sometimes you end up being right. You just end up being early, right? But I've been talking so much about this because there's so much structural confluence here for a potential top. But some of the ideas just end so bearishly that it's like quite hard to imagine how that could even be until I start doing some of this thinking. We'll see. All right. Is there anything else I wanted to cover specifically? I have some longs as well planned into January. Could quickly go over some of those ideas. Let's go here. Worth noting, some really aggressive shorts closing here on Bitcoin, and this looks good for more downside. Let me just look at this really quickly. 44 million positive delta here, this 5-minute candle. Super aggressive shorts closing, giving us a big bearish divergence here. Limit sellers still stepping in. So, I mean, personally, I wouldn't be longing this little local low. It doesn't mean we can't bounce. This is kind of a nice order flow idea for potential continuation. in the stocks channel in the members Discord here. This was kind of nice. This member says, Ubisoft up 40% from when I posted the chart. Thanks for showing me the power parallel channels. It posted this idea right into the point of control, into this ascending structure, and he got a very, very clean. It's up 58% from the low now. Just a really clean bounce off the idea. I was just pointing out there's maybe a little descending channel idea there as well. I showed a bunch of stock ideas in the members Discord. I like this idea on Shopify, coming down to this $39 region. So let's go, I'll just kind of go over because I think it's maybe interesting from a technical analysis perspective. Okay, we're going to look at this idea from a non-log perspective and a log perspective. This idea of maybe forming an ascending parallel structure. Price comes down, takes out these lows down to the 786, around $38, form a nice parallel structure. Right now, price is interacting with a log scale. GP came up and took some pivot highs. This is kind of very similar to, like, structurally the type of idea that was the top of FTM around $1.20. Excuse that there's non-log levels on here with log levels. I just don't have them separated into a folder. But I like this idea of, you know, if we do see this big pullback, this idea of first week, second week in January, putting in the low is sort of a common timing idea with several positions I'm looking at. So I kind of like this idea of a move down into the first couple weeks of the new year. It's also this idea on Groupon. Coming down, maybe forming a parallel structure here. Looking at this as kind of an A, B, C correction. Maybe a bit of a harmonic idea here as well. Price forming a bit of a parallel structure here. These lows is the anchor. This is the high. Come down, test the 886, put in the higher low, around $4. We'll be looking for signs of strength down there. So there's some log scale and regular confluence there. Then push up and I don't know why this isn't adjusting. There's some big SR levels here and some nice fib retracement ideas. Come up, retest this resistance. It's in the long I'm interested in. I like PayPal as well. Lots of strength, lots of bullish absorption in this rally. Some ideas of a parallel structure forming here. Kind of interested in longing any little local sweeps, trading up into this $160 region. Price put in a nice low down at the 786. Nice local retracement to the 618. Push up higher. All the same stuff I would use in my analysis on crypto. You can just look at PayPal's order flow really quickly. I like seeing this aggressive selling into this uptrend, continued bullish absorption, even off this rally here. Just aggressive selling. Looks definitely someone pushing price up higher with limit buying. I'm sorry, guys. There's so many comments that I'm gonna just miss here. Like when I was going on my rant about the S&P, so many comments came in. I'm just sort of like reading now the last comments. But it doesn't look like it's anything to do with what we're talking about. All right, let's look at see how this move progresses. But see, the idea here, it's not very complicated. It's you have the major level, you have the initial reaction, you have the lower high, a little local range of resistance forming here, some bearish divergences forming into that local high, aligned with our local 618, getting the move down, and then potentially some order flow confluence for a continuation. Except we're seeing a $30 million dollar aggressive short come in now, so maybe could get a little volatile. So essentially what's happened here, you could assume we see this really aggressive short close, 44 million positive delta, decreasing open interest. So this is a short closing at market. But as price starts coming lower, probably that same trader just reopening the position aggressively, and now maybe setting themselves up for a local short squeeze. That's just something to think about here, right? Like this order flow showing what the traders are doing. And here we see an aggressive short, or a short closing aggressively at market. It's a big increase in positive delta, decrease in open interest. And as soon as price starts coming down, we see another huge short open. Probably the type of person who would close a short this aggressively into this local low, probably the same type of trader is going to reopen it really aggressively. And now we could see what could happen here is price starts squeezing higher. We see that short aggressively close again, comes down. We might see it reopen, and we might see this individual trader just get chopped up here if he keeps doing this. Okay, scrolling. Yeah, the Discord is a paid membership. It's an educational group. I can go over the basic premise of it really quickly because I haven't done this in a while. There's a lot of educational content. So basically a bunch of different topics. Click on it and you can go through the individual concepts in those under those headings. Lots of other content in here, and then I do regular kind of just daily updates with my trading plans and all that stuff in the update channels. And then there's community channels where members hang out and chat, quite active. Sometimes they get a little out of control. They share their ideas. There's also a public Discord. But yeah, hopefully this makes sense. Breaking up this the time frames of all these levels, right? Like I could be looking to trade around these levels, looking to trade around these levels, but profit targets for something like this for me come into the context of this type of price action, right? So if I'm long here, I'm really, really interested in profit taking into this potential local high. And I can always look to maybe add back on a sign of strength in the POC. Always looking to reshort into a level like this on a failed breakout. Longs down to 57K, and I can take some day trades in this region, trade around these highs for targets down here, trade from 57K, targeting back up to 67, and that would be swing shorts for me. Yeah, I just wanted to make this sort of a chill live stream, kind of go over my thoughts on a few things. If you have some thoughts you want to share in the Discord, either the public or members, on maybe you have some thoughts on the S&P and stock market as a whole, some different insights or opinions, feel free to share those. I might wrap up this live stream pretty quick here, and see what the week brings. All right, hope you guys enjoyed it. I just wanted to spend a little bit of time on a Monday here, getting my thoughts coming into a new week.